Global events significantly shape the wine market, intertwining with climate change, geopolitical shifts, and economic fluctuations. Climate variations impact grape growing conditions, directly affecting wine's quality and quantity. Geopolitical conditions and trade disputes can disrupt supply chains, altering wine availability and pricing on a global scale. Economic conditions also dictate market trends. Prosperous times boost premium wine sales, while downturns shift focus to more affordable selections, affecting the luxury segment. The recent pandemic serves as a stark example, transforming consumption patterns from public venues to private settings, thereby reshaping sales channels and consumer preferences. This narrative illustrates the complex relationship between global events and the wine industry, highlighting the interconnectedness of environmental, political, and economic factors. By understanding these influences, stakeholders can better navigate the fluctuating wine market, adapting strategies to meet changing conditions and seizing new opportunities in this dynamic field. Casleah, from your perspective as a sommelier, how do you advise clients to mitigate risks associated with climate change and market volatility?
That's a good question. I think, there's two kind of perspectives. I have experience with direct to consumer and, consumer market, and then experience with buyers and trade market. And so, two totally different perspectives. We're seeing on the consumer market, volatility, being sober curious is super popular right now, right? So that's really affecting the wine market. So it's so volatile in whether, even wine is being consumed in general. So it's a lot of shifting and finding out, how we can relate to that market. And then on the buyer side or the trade side, looking at what's going to be a good investment for their seller, if they buy, Chris Carpenter wines from Napa Valley, those are going to age in their cellar for, 10 years. And then even if they have to hold on to them for a while, they can charge more as the years go on their wine list. But of course, you mentioned, the cost of storage is a big part of that as well. So you have to look at kind of all of those aspects for sure.
Dave, how did the pandemic impact your wine businesses, and how were you able to navigate through it?
Well, part of it was, we have at the Vineyard, I have actually visitors there. So you can actually come check out your vines and stuff. So during the pandemic, of course, nobody was going out. And so that affected, a lot of sales. And then we have a harvest party and a pruning party. And of course, everybody was afraid, the first year. Even though we stayed open because we were outdoors, everything was, whatever I could do. I actually had masks on the vines, believe it or not, but just as a joke. But we did do that. And then we did everything to try to, make it to where it was safe for everybody. So we still had a few hundred people would show up, which was fine. But it did do a big, for the whole Napa Valley. I mean, people didn't travel to Napa, and it was a major, major shift right there. I mean, I don't know how much we lost, but it was, it did affect the winery and the sales. I mean, I sell out every year because I don't make that much wine, but it's, we still had our people that were, hey, ship it to me. We're not allowed to come there, so please ship us the wine. And so we did that. But, I think the problem now is especially in Napa is, the tasting fees and stuff have gotten crazy. I mean, they're, $100 tastings, and it's just people aren't, they're looking for the upper client, but I think, the masses is what you want. So I think, that's why I'm doing my little vineyard thing, which is affordable at $119. So, people will come in there and then they can buy wine, and I give them a discount, a 50% discount on wine if they're a vineyard owner. So it's a good thing for them. And, I'm finding, I'm going to sell out again and run out of vines. So it's picking up for me. But I think for some of these high-end guys, they're starting to either sell their brands or, get out of the market completely because they're a little worried, what's going to happen. Because I think people are going away from, not everybody can afford, drinking $100 bottles of wine every night. So it's just, those days are gone, and then the higher end people, of course, will continue to do that, but it's still, I mean, they don't care what it costs, but it's, I think the masses, and that's, normally what you're looking for. especially like in Napa and stuff like that. But I'm afraid they're trying to be too exclusive. And I think when you get into that, you better know your client really well, because I think you can turn a lot of them off, because of that.
Jonny, can you give us some context of what has been happening with wine prices over the last year? You referenced a little bit, and then maybe like what are the impact of current economic conditions on premium wine sales in upcoming years?
Yeah, of course. So the market broadly is off 15 to 20% over the past year after a sustained period of appreciation. That has mainly been driven by the move in rates, I think. So now the risk-free rate, the Fed rate is north of 5%. So all else being equal, you're owning wine as an investment. It gives you no return. You hold it for 10 or 15 years at a cost. So it's got negative cost of carry. Suddenly, when there was free money everywhere and rates were at zero, a lot of these alternative assets that didn't really give you any return, prices skyrocketed. But now you've got to make a decision. Do you rather get 5% plus interest in your bank or own US treasuries at higher rates? Or do you want to own wine? And the answer is you don't want to own wine, as I think it's quite obvious to a lot of people. So as a result, these prices that went up massively, I mean, the champagne market was up 50% in a few years. So that isn't to say you're necessarily underwater if you invested 5 years ago. But if you bought a year ago, you most likely are. So I think that's been a major dynamic, and you can see it in pricing. It's fairly indiscriminate selling, regardless of quality. So you can have weird kind of mismatches where a very good vintage trades at a 20, 30% discount to a poor vintage. Why? Because no one owns the poor vintage in their investment portfolio. So the price of the good one is now way cheaper. So if you're discerning and able to kind of spot these things, there's great opportunities, that's for sure. Did that answer your question? Was there a second part I missed?
No, I think that answers the question. I mean, if you have zero interest rate policy, or in some places they had negative interest rates, I guess that was a good excuse to drink.
Yeah, absolutely. And I think you had massive increase in disposable incomes as well when everyone was locked up in the pandemic. So wine wasn't the only asset class or alternative asset class that ballooned. So yeah, we'll see where we go.
Yeah, if things normalize, and if we should see higher interest rates for longer, just doesn't return to zero. I don't know. What do you foresee in wine prices?
I expect that eventually the selling stops from these portfolios. So that'll be key. I mean, the other really interesting dynamic is, clearly here we're talking about like the upper echelons of the wine market. These are not producers struggling to kind of pay rent every year. There's a really the wine market is often the haves and have-nots of production, right? There's the brutal farming side, and then there's the amazing estates where it's all beautiful and perfect, and the wines cost $500 a bottle. And so pricing is also being squeezed at release. So prices are going up and up from producers because they're better and better capitalized. So billionaires own these wineries, multinational corporations, LVMH, these kind of owners don't necessarily care about selling wine for now. So I suspect what we see is rising pressure on release pricing, and less wine being sold now, with the expectation that these producers are probably hoping that they can outlast the market, and then prices will recover. And so I think for a consumer, certainly, or an investor, the back vintages start to look more attractive, because if you can buy, let's say, if we look at Lafite as an example, 2010 trades at a 15% premium to 2019, let's say that they're equally good wines, more or less. That's 15%. If you wanted to finance that at 5% compounded for 9 years, right? The difference between a 2010 and a 2019, that's over 50% price differential. So you can argue that some of these back vintages are really attractive, particularly given you're not, the release prices are going up and up from these well-capitalized producers.
I like what Dave talked about earlier. If you have a case that has appreciated and you're willing to part with some, you can sell some later. You enjoyed the wine, and then you sold later at a higher price with some remaining bottles to help fund the initial purchase. Let's move to segment 3.